Hi, welcome to the Market Alert for Thursday, the 16th of March 2017. So, yesterday, as you would expect in the first part of the session, the market was sideways waiting for the Fed. We did have a sell signal here that failed if you took this, but as with all these things this week, it's best to stay away and wait. Even saying that, you can see that you could have made back the loss off this, but the market was waiting for the Fed, and you can see for the first few hours there's hardly any movements here. You just got this sort of sideways range there, and it took until it broke out there, and then it came back into there until the Fed news came out that they'd actually increased interest rates. No surprise there, and the market listened to Yellen for a bit, and then we had the buy signal, which you'd expect the market to move higher, which is why this week I focused on the daily chart and drawn in this scenario for you. You can see the market now doing exactly this. So we've got a situation where the market's come down, and where we're heading for is that this 76% fib area. If the market fails to hold there, then it will move lower if it breaks the rising lows that they've got there. So that's how I see things working at the moment, and if of course they go through, then they'll go through and continue to move to the upside as well. So news wise, to drive the market today, what have we got at 2 p.m? Just the JOLTS opening, which is a medium impact news item, so that won't be too much of a problem. But as with the speech to Congress, there's a chance that the market's going to move back to the upside at this time, even though we have this issue in the background of the debt ceiling also becoming official. And if we just have a quick look at this, you can see under Clinton, he only increased the debt ceiling from 4 trillion to 6. Then Bush went from 4 to 5 actually, and then Bush to 10 trillion, and Obama, who everybody thinks was fantastic, took it from 10 trillion to 20, which is what came into effect yesterday. So you've got a situation there, the suspended until March 15th, so the debt ceiling at 20 trillion was suspended, and now of course that comes into effect from yesterday, which means that according to this same article, there's about 66 billion left in the pot. So as we go through the summer, and depending on how Trump gets on with Congress, whether they actually increase the debt ceiling or not, personally I have no idea, and it's a case of wait and see. We've been here before. People say it's different this time, but only time will tell. There's nothing to stop the US from increasing their debt, the same as here in the UK, which they continue to do so. We're now spending 1 billion per week in interest in the UK as well, and nothing seems to be affected. But then again, that's no surprise either. It's called apathy. And as the article states in one part, there was a wonderful paragraph which is here: the plague of short-term thinking and desire for instant gratification has dulled America into apathetic fog. You could say the same for the UK as well. People no longer act as though they have a stake in the future. They choose willful ignorance, even as most serious problems go unresolved. The 20 trillion balance on the national credit card is the most tangible example of how nearly a century of decadence can transform a society. This country once represented the world's moral compass and a beacon of economic freedom, but those pillars have been abandoned to indulge in war profiteering and monetary fraud. Absolutely perfect summation there of the debt situation, and not just for America but also for the UK and the whole of Europe as well. It is a short-sighted thinking and instant gratification society. Get a car today brand new and everything thrown in. It's just the way of the world at this time. So, but at some point it will end, and I can't tell you when, but there's no doubts about it. You can't continue this sort of continuing printing, increasing debt all of the time, and certainly with interest rates moving to the upside as well, because it's going to increase the interest payment on the debt. So at some point the lunacy has to end, but when it ends, who knows? The main thing at the moment is the market's going to remain a buy as going forward, because they still have 66 billion they can play with. Even though this is making the news, it's not a big deal at the moment. In the implied volatility, this also pointing to this conclusion as well at 9.12. And 1 second, I'll just switch charts for you. It's a bit clearer in this chart. You can see there you've got the market dropping down yesterday. I'll just add that in. Let me just add a label, and there you can see 9.12 on the implied volatility. This dropping down. I can just move it if it allow me to. There we go. And there you can see the market going up, heading towards that 76% in the prices, and the drop in the implied volatility there, which again is consistent with the market moving to the upside. Right, that's it for today. Let's see how things unfold. It probably moved quite well in the pre-market session as Europe opens up shortly. And again, we'll take a view when we see the first hour of trading from 1:30. Right, that's it. See you in the next one. Thanks for watching.